Today we are going to take a look at Alphabet, Google stock. They just reported earnings and they're up pretty big. So let's get started. First, let's start off by looking at this company's stock price. Just after hours, this company is up about 8%. But let's take a look at how this company has done in the past 6 months. Let's take a look at the peak from February 2020. This company is down about 18%, not counting the current price that it's up right now. So maybe probably about somewhere in the low teens or in the 10% down. So it's still a little bit further away from where it was just 2 months ago. So why the big drop for such a big company? As we're gonna see, a huge portion of this company's revenue comes from advertisement places. And I guess a lot of investors are fearful that when companies start to slow down, one of the first expenses that start to get cut off is marketing. So that's one of the main reasons that we saw that nice drop in Google during the whole slowdown. So before we go any further, guys, don't forget to subscribe, don't forget to hit the thumbs up, and don't forget to post in the comments, how are you guys feeling about Google? Are you guys bullish on Google? Are you guys bearish on Google? Even let me know before I even start this video. And the way this video is gonna go is after we take a look right now at the stock performance, we're gonna take a look at some articles, we're gonna take a look at the earnings result, and we're gonna take a look at this company's balance sheet. And finally, I'm gonna give my own thought and my own valuation. Again, that's just an opinion, not an advice on what I like about this company. All right, so now let's take a look at Google's earnings results. I know the company is called Alphabet, but just force of habit, I'm still going to continue calling it Google. So Q1 non-GAAP earnings per share were $9.87, which missed by 89 cents. GAAP earnings per share were $9.87, which missed by 34 cents. Revenue for this quarter was $41.2 billion. That's up about over 13% year to year, and it beat by $990 million. So you might go, hey, Jose, this investors were worried about nothing. This company's revenue is up. The slowdown didn't really affect it. Well, my friend who just was myself and asked myself that question, right now, earnings that were reported in Q1 only had about the last 2 weeks of March, and the last 2 weeks were the weeks that the shutdown happened, especially here in the United States. So here we are on this article from CNBC, and here we're going to talk about their expenses and their buyback. First, in expenses, the company had originally expected a 20% headcount growth in employees. They're gonna see a slowdown in this. So right now, that's one way they're gonna cut expense. The company is also cutting in marketing budget by as much as half, while placing freezes on various parts across the company. And that's pretty crazy because, right, we're saying that Google, the main way that Google makes money is through marketing. But Google, one of the biggest companies and one of the companies with one of the greatest balance sheets that I've seen, is actually cutting down their marketing spend by 50%. So that to me is actually a kind of a bearish segment for Google. If a company with such a great balance sheet is gonna be cutting down its marketing spending, imagine other companies with really bad balance sheets. They're gonna cut down that marketing by a lot more. One thing, I think Google is one of the first companies that are still doing this. They agreed that they're still gonna continue their share buyback program. And to me, I thought that was actually pretty crazy. But then once we take a look at this company's balance sheet, you're gonna see that this company has cash and cash to blow. So here in the next article, we're actually talking about the decline in advertisement revenue that this company is seeing. So like I mentioned, right, most of this Q1 was pretty much okay for the company. They saw strong growth, but they did mention that they saw a decline in the mid-teen percentage by the end of March compared to same time last year. And we know that mid-March was when the whole coronavirus shutdown started. So obviously that's going to take a huge impact for the upcoming quarter. In this next article, we see that even some of the company's biggest advertisers, such as travel agencies, entertainment brands, and even Amazon, have said that they plan to pull back on marketing more, even if the country opens up back soon without any major complications. So again, I can see why investors are still a little skeptical of this company's future revenue. All right, and now just to think of it, it's still pretty scary that Google itself is cutting marketing as well. All right, so next we're just going to take a few highlights of Q1. And here first is ad revenue did decline on YouTube by 14% compared to the prior quarter. But remember, last quarter was also the holiday season, so a lot more stuff are out, more movies, more toys, more sales are trying to happen during that time frame. But remember, compared to same time last year, we did see a 33.5%. The CFO did mention that performance was strong during the first 2 months of the quarter, but then in March, they experienced a significant slowdown in ad revenues, and we talked about that earlier in this episode. Operating income rose 19% to $7.98 billion, and operating margins dipped to 19% from a year ago compared to the 23% that it was just a year ago. Now, if we take a look at Google's revenue, remember I mentioned they made, how much money did they make again? They made $41 billion. Out of that $41 billion, a huge portion comes from Google Search and others. So Google Search and others, this is pretty much if you're using Google's platform, and all the ads that come out are pretty much there. And that's up 8.7% compared to the same time last year. Next, they have YouTube advertisement. YouTube advertisement is 4.03, and that's about 10% of total revenue, and that was up 33% compared to the same time last year. Google Network members properties was $5.2 billion, and that was up 4.1%. Google Cloud makes up such a small portion, and again, I'm pretty bullish in companies like this just because Google Cloud, I feel like, is going to continue growing and growing. Google Cloud made $2.78 billion, and it was up 52% compared to the same time last year. Google Others was $4.4 billion, which was up 22.5%, and Other Bets. So Other Bets are every other, I don't know if you guys know, Google has so many different companies. They have, for example, a smart car, they have some form of health companies, they have some form of drone delivery business, and this only makes up $135 million, and it was down 20%. But remember, this is such a small portion, it makes up less than 1% of the total revenue. But I think it's pretty cool that they are funding these other companies, because eventually these companies can be potential huge winners. Alright, so we've talked a lot about this company's revenue and pretty much its income statement. That I think the only statement we haven't really talked about is this company's balance sheet. And I keep mentioning how strong of an asset of a balance sheet Google has. So let's take a look at it. First, let's take a look at total cash and cash equivalents and marketable securities. So these are any assets that can actually be liquidized pretty quickly. Right now, this company has about $119 billion. Is this billion? Holy crap. Yes, $119 billion in cash and cash equivalents. It's up about $2 billion compared to the same time last year. And that's just insane. Imagine having that much amount of money. Total current assets for this company is $152 billion. So total cash makes up over 66% of this company's total current assets, which I think is pretty good. There's nothing else in the total current assets that have any major growth or any major declines that we should really take a look at. Everything seems pretty simple, pretty similar to same time last year. Next, let's take a look at total assets. Total assets for this company were $276 billion compared to $273.5 billion a year ago. So that was only about a $2 billion increase. Again, there's nothing in its total current assets or current assets or long-term assets that really call out to me. There's no red flags here. So let's skip off to this company's liabilities. Let's start off with this company's just total liabilities. Total liabilities for this company is $74.5 billion. In theory, this company has enough cash to pay off its total liabilities. So that to me tells you how strong Google has a balance sheet. Its long-term debt is $4.5 billion. I mean, this company has just ridiculous amount of cash. There's no real current liabilities that really, again, throw any red flags or any changes. And when I mean red flags, I just mean that a red flag to me is when there's a huge change in some form of asset or liability, and I would dig deeper to make sure that there's nothing crazy going on here. But when things look pretty similar, maybe a few million increase or a few million decrease, to me that's just normal operations increase. So, like again, I said this company has enough cash to pay off its total liabilities and still have about $40 billion left to do whatever the heck it wants, and it can definitely go and buy more companies. All right, so finally, I just want to take a look at this company's forward PE ratio. If you guys have been watching my channel, you guys know that I love valuing companies based on their forward PE ratio. For December 2021, this company is expected to make $54.31. Currently at $54.31, let's put up the magic calculator. At the current price of $13.30 divided by, what was it, $54? Divided by, let's just go $55 even, gives this company a forward PE ratio of 24.18. Forward PE ratio of 24.18 is not that bad. I've actually been a big, let's just start off. I'm really bullish in Google as a business, right? We have Google search, we have YouTube. Two of the biggest search engines this world has known to be used. Right now, you're probably watching this video on YouTube, and you're probably searching about Google using Google. This is how strong its platform is. They also are joining into the clouding game, and they're also another sector I'm pretty bullish on is the esports sector. And YouTube is doing pretty strong with their gaming sector and trying to get more people to come and stream their games on YouTube Gaming, as well as the new platform YouTube Stadia, which is a clouding gaming, which I think will change the whole gaming world in the next few years. So for me, I am pretty bullish of Google. And throughout this whole drop, this company's forward PE ratio has actually been below 20, and I have actually been buying into this company, and I'm pretty happy right now. At a forward PE ratio of, what was it, 24, to me, I have bought a nice amount in the past few weeks that it's not really enticing me to buy more. To be honest, I was kind of hoping for a small drop for me to even increase my position a bit more, but I am happy with my position size right now. Again, this is just my opinion and how I'm gonna play. This does not mean that Google is a bad investment. I know how my portfolio is laid out, and I know I have plenty of position on Google right now, and with the current price, I'm not really too enticed to go and buy some more. Like I said, if this drops below a 20 forward PE ratio, and that's what I'm gonna be keeping my eyes on, I'm definitely gonna keep dipping into my cash and buying some more Google. But look, this company is a huge growth. We see the annual revenue estimates for December of 2020 is supposed to be 166 billion. For December 2021 is supposed to be 200 billion. That's over a 10% increase in revenue for such a big company. Of course, a lot of these estimates are taken in fact that this might be a very slowed down year for Google because of the slowdown in advertisement, but still, seeing that type of growth is crazy. I mean, what else do we like about Google? For me, that balance sheet is amazing. I mean, when you have enough cash to pay off your whole total debt liabilities and still have $40 billion in cash, this company is one of the strongest companies I have seen. I think it actually might be the strongest company I have seen, like number one. And like I said, I'm pretty bullish on Google. I have a nice position at hands right now. I don't think I'm gonna enter any time right now with a forward PE ratio of 24, but I think that's the great thing about great investments. Sometimes you just have to wait a bit. So I hope you guys enjoyed today's episode. Make sure to subscribe, make sure to hit the thumbs up and hit the bell. Let me know on the comments, are you guys kind of excited with this big gain of Google? This company is still about $200, maybe a little bit more from its all-time high, so this company can still move. So take care guys, have a good night, and see you next time.